Hello and welcome to the July 2025 DSCR loan update. There's a lot to talk about, so let's jump right in. Today's DSCR loan interest rate is 7.28%. This is the national average, while at offer market, we are at 7.15%. DSCR loan rates depend on two things: the risk-free rate and your credit spread. The risk-free rate is most commonly the 5-year US Treasury. Your credit spread is a risk premium on top of the 5-year Treasury, which is determined by several factors, including loan-to-value, credit score, property type, property location, prepayment penalty, and institutional investor demand. The DSCR loan rate is calculated by adding the risk-free rate and your credit spread. The yield on the 5-year Treasury has been volatile so far this year, trading between a high of 4.62% in January and a low of 3.71% in April. At the time of this video, the 5-year US Treasury is trading at 3.95%, close to the 4% average we've seen over the past few months. The Fed funds futures market is expecting, with 95% probability, the FOMC to leave the rate unchanged at their July 30th meeting later this month. The current Fed funds rate is 4.25 to 4.5%, and the market is pricing in a 64% probability for a 0.25% rate cut at the September 17th meeting. It's important to note that the 5-year Treasury is already pricing in this current expected path of rate cuts. Waiting until the Fed actually cuts may not result in a lower 5-year Treasury and runs the risk that new economic data on the horizon unfavorably changes market expectations and the Fed's actions and guidance. For this reason, and given unprecedented economic uncertainty due to tariffs and U.S. government debt and deficit concerns, we are advising our clients to proceed with financings and consider a low prepayment penalty. We are also offering up to 50% off our origination fee for subsequent refinancing of loans originated this quarter ending September 30th. Section 8 investors, listen up. Our guidelines for DSCR loans for rental properties with Section 8 leases have received a favorable update. We now offer the same industry low rates and maximum LTVs, 80% for purchase, 80% for rate and term refinance, and 75% for cash-out refinance, as we do for non-Section 8 leases. Now it's time to spill the tea. A large DSCR loan mortgage fraud with 112 open foreclosure cases in Baltimore City alone is making its way through the courts. From what we have learned, the scheme used undisclosed non-arm's length transactions, inflated sale prices, inflated appraisals, and kickbacks. Major institutional investors are expecting millions of dollars of losses. Some have paused note purchases in Baltimore, some have paused Maryland statewide, and at least one has also paused Philadelphia and Detroit to investigate for similar behavior in similar markets. Offer Market is actively lending in all of these markets with our usual competitive terms, though we are experiencing some delays for a small subset of our loan files caused by more stringent review of valuations by institutional investors. This is why appraisal management companies, or AMCs, third-party appraisal review for ARR and CDA, which are appraisal risk reviews and collateral desktop analysis, and internal valuations are critical. The broader DSCR loan industry is using this situation to tighten underwriting standards. You should expect a higher degree of scrutiny of valuations, especially in scenarios with no or low seasoning and significant valuation increases over a short period of time. It's possible you will encounter scenarios where a more conservative internal valuation may be used by your DSCR lender as the value basis for your loan instead of the as-is value in the appraisal report. For example, a property purchased for $100,000, rehabbed for $25,000, that then receives a $200,000 as-is value. If the ARR comes in at $200,000, but the DSCR lender's internal valuation comes in at $180,000, the $180,000 may be used as the value basis instead of $200,000, and your 75% LTV cash out refi would be a $135,000 loan amount instead of a $150,000 loan amount. These efforts address concerns about the quality and accuracy of appraisals and third-party appraisal reviews. On this note, with growing private equity involvement in the appraisal management space, we expect higher appraisal fees, lower service levels, and lower quality appraisals. So at OfferMarket, we have expanded our lineup of AMCs to obtain the lowest cost, highest quality, and highest service level for our borrowers. If you are concerned about low quality valuations by one or more appraisers in your local market, you can always ask your DSCR lender to exclude these appraisers from the AMC's appraiser panel. And now for the fun stuff. We've rolled out several exciting updates to our marketplace for off-market properties. You can subscribe to deal flow alerts in your target zip codes. The instant new off-market properties in your target zip codes are posted by distressed sellers, tired landlords, or wholesalers. You receive an email alert. You can chat with the seller and submit your offer directly on the listing. We've also rolled out OfferMarket Intelligence Listings, which uses predictive analytics to surface properties that are likely to sell off-market. Every time OfferMarket funds your loan, you receive a complimentary unlimited zip code deal flow alert subscription for 12 months from the date of funding. As rental investors, we understand how important off-market deal flow is, especially nowadays, and we're excited about the growth of our marketplace and the value you stand to receive. From everyone here at OfferMarket, we thank you for taking the time to watch this video, and we look forward to helping you on your real estate investing journey. And we hope you're having a wonderful summer.